All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Let's get to it, right? That's what you want to see, these corn prices. Let's see what we've got going on so far. We bring up that corn table. Let's go 12 3/4 cents lower in the March to 647 3/4. May's off 10 3/4 cents to 648 1/2. So still have that weakness in the corn. How about soybeans? What's going on over there? They were higher. They're about the same place they were the last time we checked. 7.5 cents higher in the Jan, 14.37 1/4. March is up 8 1/4 cents to 14.45. How about that? All right. How about the wheat in, what is this? Chicago wheat, right? It's 19.5 cents lower in March. 7.63 1/2 is last. May's down 19 3/4 cents to 7.75 1/2. And that's towards the lower end of those ranges as well. If we take a look at the hardwood wheat in Kansas City, the old HRW down in KC, we've got that March contract off 20 cents to 8.70 1/4. We've got May off 19 3/4 cents to 8.65 even. Spring wheat, Minneapolis, what does that have for us? Much the same, 17 cents lower in that March contract, 9.21 even as last. May's off 14 cents to 9.20. All right, there you go. That's going to give you the idea what's been happening in the wheat. Let's stop by the old cotton market and see what's going on there. We're giving back some real estate here, folks. March is off 219 points to 82.66. These prices are brought to you by Bar Chart, and we're going to have some content brought to us by Todd Horowitz from Bubba Trading where are you? In Vegas. You just said Vegas.
I'm in Vegas.
Yeah, I'm in Vegas, baby. Yeah. Oh, look at that. Oh, geez. He's not all hat and no cattle. He's got a big hat right now. Well, what are your thoughts here on this market? I mean, yesterday it was all about the beans. Today it just feels like we don't have anything bullish to get our hands into, and here we are.
It feels like a sinking ship at the moment. You know, it's a very, very challenging market. Today's action, fairly decent volume compared to where we've been recently. And I wouldn't be surprised, if this is putting in a solid bottom. We really struggled the last, 6-7 weeks trying to get some traction here. And we really haven't been able to do so. But I think you might get it here. Remember, if you look at the equities on Wednesday, we had that monster short covering rally, which actually had some follow through to it. I think the grains are going to get a similar reaction, and I think that they won't stop though once they get started. But I think there's still a lot of pressure. But I think they finally forced people out of markets because you can see the dramatic increase, even though it's not great volume, but it's a big increase over the last 8 or 9 trading days.
Okay, you've been, and that's pretty much similar to what you've been saying for a while now. You're still in the camp that you want to be long rather than short, and I probably am a little bit too. But are you concerned about the Fed taking, say, decent jobs numbers like we got today and using it as an excuse to keep jamming these rates higher and not really waiting to see what the effect will be? Because I think that if we continue on this rate hike, I mean, it's the fastest we've ever raised rates ever in history. That could be doing some damage to the economy, and that could hurt, demand.
It could, but remember, we still got to eat, Scott. The one thing, when you're dealing with consumable commodities, people are going to eat. They're going to get consumed. And we don't have an overabundance. 3 years ago, we had too much. Now we don't have enough. And I think that these are the problems. And the Fed, listen, I didn't buy into what Jerome Powell said in the first place, because at any sign of movement, they're going to go back to hiking anyway. So to me, it was a BS announcement that only made the markets react and really nothing else. The prices are going higher at the retail end. They've got to go higher at the wholesale end because at the end of the day, the cost of all these products to input are going up much higher. And if the farmers can't realize higher prices, they're not going to produce. All
right. That's good stuff. We're going to go away. We're going to pay some bills, and then we're going to come back and talk more Livestock with Todd Horowitz in Las Vegas after this. All right, welcome back to Market Day Report. Let's get after it. Let's see what these livestock are. I'm actually interested to see what they're doing right now. Why don't we bring on live cattle in Chicago? This hasn't done that much either since the last time we checked. It's still about steady better. We got Feb up 55 cents. On the floor, we would call that double nickels. 155.97 is last there. April's up 42 cents. To 159.67, and you can tell by the board not changing that much that there's really not a lot happening over there on a Friday. Feeder cattle, well, let's see. We've got Jan up $1.70 to 182.77. We've got March up $1.07 to 185.37. So that's a strong board comparatively speaking. And then now we've got lean hogs. What is this one? Well, lean hogs is Feb's up 65 cents to 89.85, and April's up $1.05 to 95 spot 30. That's giving us some time to bring back in Todd Horowitz from Bubba Trading. He's been waiting patiently in the wings here for us. Todd, have you looked at the livestock here today? Anything jump out at you?
Yeah, I just think that they probably are at the very upper end of where they're going to go. Again, I will continue to say I don't think they're going down dramatically. I think they're going to trade in a range, and the range is probably 20 cents wide, back and forth. And hogs will be the go-to if crude comes back up again. Crude's been under some pressure, and then Then we had this big rally late in the end of the week. But it all ties back to the consumer and the economy, and what they're going to be able to afford. And certainly, if Powell, going back to your original point, continues to hike rates here, they're going to have trouble affording beef. We've already got record debt and credit cards, which is hurting every industry out there. And even last Friday's Black Friday sales, they're showing a record number and an increase. But if you just subtract the GDP, you know that it's a negative number for the year.
Well, we saw the real numbers, and the real numbers were that people spent more for less, and that was absolutely the case. And you're right. If you take a look at the CPI, it's 7.7%, and those holiday sales are only up between, say, 3 and 5%. That's still a negative. So that's no bueno. You're right, and that's one thing I worry about. And I talked to some of our analysts and farmers that look, you got to build it in your marketing plan. You're going to be paying some high prices this spring. You got to hope that this economy holds together going into the fall, because if your customer's got no money, what's the price of a gallon of gas or a bushel of corn? So that's something we need to keep in mind. I appreciate you coming on. Great hat. Love it. Todd Horowitz,
Thanks,
Bubba Trading. He's in Las Vegas. We're going to bring back here to Nashville so I can throw this over to Janet.